First part is Nick Woods from Instinctive is going to pick up from now and look a bit at the EIF. And then afterwards, we're going to look at the next stage, mid-market lending as well. So, Nick, over to you.
Thanks, David. Good afternoon, ladies and gentlemen. By way of introduction, Nick Woods, Head of Financial Services at a communications consultancy called Instinctive Partners. And it's a real pleasure to have the opportunity to moderate this discussion at a time when political and economic uncertainty is rife and when governments, businesses and investors are grappling with the issue of how we help SMEs thrive in that market. It's a real pleasure to be here and to be joined by two fantastic panellists in Patrick and Angelo to look at the initiatives that they've been undertaking together. So before we dive into the detail, I'll just pass over to Patrick and Angelo to introduce themselves, and then we can get cracking on the EIF investment specifically.
Hello, everybody. Can you hear me? Okay. Well, Angelo Salvatore, investment manager, diversified loan funds at the EIF. Basically, we've been investing in this asset class since 15, basically, with a new product specifically addressing loan funds investing in diversified strategies of senior debt. And as part of this, we met Lendix.
Yeah, so my name is Patrick de Nonneville. I'm the Chief Operating Officer of Lendix. We're a continental European platform lending money to SME. And we're today active in France, Spain, and Italy. And this year we're opening Germany and the Netherlands as well.
Brilliant. And gentlemen, it's been a very busy couple of months for you both, following the investment from EIF initially last July, and then obviously the further announcement this January. Angela, if I can start with you, it seems clear that you're seeing a lot of value in supporting small businesses through online lending platforms. Could you give a bit of detail around and what the rationale is behind that and why you think online lenders make good distribution partners?
Yes, sure. Briefly about European Investment Fund, we've been active since 1998 to support SMEs. Basically, we work deploying the funds from the European Commission with a real focus on real economy and facilitating access to finance from SMEs. Now, with the product that we launched in 15, we are specifically addressing these through investment in close-ended funds. And actually, this has brought us to analyze a diversity of strategies. As part of these strategies, we found a lot of activity in this lending marketplace, actually, and analyzing different strategies again. But what we liked in particular in the experience with Lendix was the overall setup, basically, of the initiative. First of all, the strategy was fitting our mandate criteria, so diversification, senior financing, clear SME and small mid-cap focus. So this is a definite A+. A pan-European approach. Actually, when we started, Lendix was more focused on France, but already looking at other countries, and this was helping again in the diversification, which is for us both at the level of concentration per borrower, but also sector concentration, geographies, actually. And so this is something we highly appreciated. But then also the organization and the setup. So we like the idea of investing in a fund regulated as an EIF in France in this case, but also an organization that had a lot of support from the shareholders of the company. Adding solidity to a new business model is something that was important for us. And then also, let's say, the overall setup in terms of alignment of interest. So allocation between the investment on the fund and the retail platform is essential. All the work they've done with the French regulator on this side was a plus. Direct investment from the managers and the shareholders into the fund, pari passu with other investors like us, and also a transparent fee structure, which was easy to...
Well, no fees.
Brilliant. And Patrick, from your side, aside from obviously the addition of lending capacity to the business, what are the real benefits you feel that the EIF partnership has allowed you to have?
Maybe it will help if first I describe a little bit what Angelo was referring to in terms of alignment. So we, on Lendix, you have basically two types of lenders. You have retail and you have a fund. And the way we've structured it is that the fund and retail lend to the same SMEs under the same conditions. So we put a loan on the platform, the fund takes 51% of it, retail takes the rest. So you have complete transparency and alignment of interest there. And also, as Angelo said, the managers of Lendix, we invest in the fund, own personal money in order to create that alignment of interest, which I think is crucial when you start a platform to show that you're not just trying to ramp up origination. But back to your question on, what obviously the money, is a significant amount of money and lending capacity, so it is in itself very important to us. I think there's several aspects to the partnership with EIF which bring many additional benefits. The first thing is that the due diligence and etc. was an education in itself for a new organization like us, and it was kind of progressive because we've had insurers come on board, the French Public Investment Bank came on board, etc. But I think the EIF is recognized as having another level of requirements from their partners, and I think we felt we came out of that much stronger as well in our processes, transparency, the reporting that we provide, and etc. So, which makes us ready to get access to other very sophisticated investors as well. So that's number one. The other thing is we designed Lendix from the beginning. Our idea is to be everywhere, eventually in the Eurozone at least. And so to have partners in financing who are actually, for whom it is a plus to lend systematically across all the countries we're present in is obviously a huge benefit. So actually I found it very interesting. Samir this morning mentioned, I think 50% of the lenders on Funding Circle lend in across several geographies, which I think is a very good, very strong result. And we, I think on our side, it's now 95% by design, effectively lend in the 3 countries, and will lend automatically to the German and the Dutch market when we open there.
Fantastic. And looking at, I suppose, the anticipated returns from the partnership, Angelo, from the EIF's perspective, what type of return size are you looking for through the partnership with Lendix?
Well, for us, the returns are never the only element, actually, of course. But so we are a supranational entity, and we deploy capital from the European Commission. But when we act as an LP into a fund, we are pari passu with the other investors. So this means that we run an analysis of consistency of returns, risk taken, and underwriting process in the end. Return is never the only element that we look at. Under this program, we've been investing in funds, investing in plain vanilla loans to, small mid-cap and mid-cap companies, typically returning Euribor plus 3%. And we've been investing in other initiatives like Lendix, more targeting something like 5.5, 6%. So actually, in this case, of course, you take a premium coming from the size of the companies that are smaller and more liquidity premium, of course. So all in all, it's the consistency that it's important for us. It's important for the other investors that invest alongside us, and this is why actually the strategy must be credible, actually, in the promised returns. And
exactly, profitable. That's at the end. I mean, that's the only way to grow is to provide excess return. I think I think it was James in the previous panel who mentioned that you already have a lot of money that's been deployed, but in large size tickets, And in large size tickets, because the small size tickets didn't make sense economically. It was not economical for those funds to treat them. And that's where I think the whole promise of this sector is getting realized, is because technology allows us to do the small tickets, 30K up to 5 million, which is our, our niche, and with an average of about 400K in a profitable manner on a per ticket basis. And it means that this whole sector of the economy, which was previously only accessible via the bank's distribution networks, is now accessible directly, which gives a lot of leverage to people who want to support the sector of the economy, or to get excess return.
Fantastic. And you talked a little bit, Patrick, around some of the kind of regulatory and due diligence process that was necessary to put in place to bring the EIF on board. And I'm just interested to hear how, from a reporting perspective, you're kind of managing that to make sure that all investors, whether they're institutional or retail, are kept up to date on the performance of the business.
I was very interested also in the previous panel about the question on whether transparency was a problem for the listed funds. I would maybe have answered that it's transparency plus leverage plus mark to market can create additional difficulties. From our point of view, we see transparency as being a huge value added, because that's where you create the trust that will allow this business model to develop. And so we, our whole portfolio is accessible directly to anybody. You don't even need to register on the platform. But obviously, all the sector analysis, all the late payments analysis, and the efficiency of the recovery and all these things is accessible to our investors, either directly via us, or we actually have a partnership with AltFi Data to provide this as well in a structured, comparable form across platforms.
Well, on this, actually, just I can add that Lendix was very receptive in, let's say, in discussing with us the reporting requirements that we apply across the board, I have to say, so for each of the funds in which we invest. Ultimately, it's all about getting the full access to the underlying companies and certain KPIs that we need to collect in line with the regulations that support the fund. Well, I have to say that also the systems in place are helping us in tracking the performance and the characteristics of the loans in which they invest, and that we need to monitor.
Yeah, and we heard a little bit from Samir and from Ridgen actually this morning about the need to protect the investors, and particularly the retail investors. And I suppose, Patrick, have you, from the kind of the processes you've put in place and bringing the EIF on board, has that helped you in terms of attracting retail investments to the platform?
I think the reality is our retail investors really value the fact that they are not getting the stuff that nobody else wants. Yeah. They value the fact that they're getting things that large insurance companies, the EIF, the managers of the platform want and invest on with them pari passu. And it's something we spent a lot of time explaining to the regulators as well, because they were initially nervous about the fact that we would mix the two types of investors. So we really had to demonstrate that actually, if anything, the information advantage was on the retail side, because they can pick and choose, rather than on the institution side.
Brilliant. And I suppose if we look ahead now in terms of kind of what's next for the partnership, I suppose from the EIF side, are you actively exploring any other partnerships in the way that you've adopted with Lendix?
Well, of course, we are monitoring the market. Well, EIF is supporting this space in different ways, actually. So we invested in Lendix through the Diversified Loan Fund program, but then our colleagues from the securitization, they did a transaction involving Funding Circle. Other colleagues from the microfinance, let's say, and guarantees, they did a transaction with IVOCA. So actually, it's a market that we are looking at closely, and well, we want to continue investing in this.
And are there any within that, any geographical markets that you're trying to either increase exposure to, or you think are particularly interested at this point in time?
Well, the mandate for us is to cover as much EU countries as possible. I see there is a question here behind me, but so across Europe and also neighboring countries actually. So we do programs involving Eastern countries, Turkey as well. So clearly the focus is Europe.
Yeah, absolutely. And Patrick, from your perspective, in the EIF investment, obviously you talked a little bit about your entry into Germany and Netherlands. What's next for the business? Is there product innovation in the pipeline?
So if you think about, the three dimensions in which we're trying to grow, this one, which is obviously origination. The other is geographies. And so we opened 2 countries last year. We're going to open 2 this year, and we're planning to do another 2 in 2019. And product is something that we are looking at, and mainly we're preparing for this in the hires that we're currently making. So the team we're, for example, recruiting currently in the Netherlands has experience in other products, but we want to first of all, it's still going to be SME and SME finance, but it's going to come a little bit after the rest.
Cool. Thank you for that. And I suppose there's a related question, I suppose, is almost related to the bottom question there, Angelo, which is around the UK, reports from government suggesting the British Business Bank is going to bolster its efforts to support, to substitute EIF interests. From your perspective, the Brexit debate that's ongoing, does that an opportunity or a threat for you in terms of your investments and where you look to make them?
Well, of course, has created some uncertainty in the origination in the past months. Although, nothing has changed, and nothing will change until next year. But I hope nothing will change going ahead, meaning that in the end, the focus is clearly Europe for us, and as long as we have a balanced portfolio allocation, this is part of our strategy. So.
And Patrick, have you seen, in terms of the financing requirements from your SMEs that are using the platform, any shift on the back of the Brexit vote in terms of the challenges they're facing?
No, not really. When you're talking about French, Spanish, Italian SMEs, the UK is a market for them, but it's very rarely more than 10-15%. So it's not been a real factor, to be honest. What we have seen, what surprised us, is when we launched, we prepared ourselves to deal with very small tickets, and actually, because we thought that was the most underserved market. But what we've seen is real demand for companies with larger needs, and which do tend to get financing from the banks, but maybe not with the kind of speed or collateral requirements that they actually need for their business. So in terms of the width going from the very small to the slightly larger companies, that's been a real change.
Yeah, and it's not been, I suppose, a structural shift in the type of financing they need. It's just the channel and speed at which you're able to distribute that.
Yeah.
Fantastic. I might we've got a little bit of time here for some questions off the back. So if I take Anonymous at the top, we've obviously got an Irish fan in. When will online lenders make their way to markets that are underserved in terms of competition for SME lending, such as Ireland? Patrick, if I throw that to you, have you any thoughts on that?
Yeah, we looked at Ireland in terms of whether we would do this in 2018, and it could very well have been Ireland. Every market that we've entered so far, France, not Italy, but Spain, and now Germany and the Netherlands, people's reaction is always to say, but those markets are already banked or overbanked. I think we kind of show in each of these markets that actually there are still things that can be done, maybe in a slightly different way, where we can bring value. So I don't know if the SMEs in France are so well served as compared to the Irish competitors or colleagues.
Cool. And I suppose, if Angela, one for you in terms of the EIF. I think we've touched upon will the EIF invest in UK currently and post Brexit. I think we've covered that off. One thing I want
probably I can add something on Ireland before. Well, of course, investors need to be ensured of the kind of risk they take, and we are acting in countries like Ireland, providing guarantees at the level of the loans. And actually, this can be also something that improves reduces the downside of strategies in certain countries, and that might help also in developing these strategies.
And one thing I wanted to touch upon was briefly the shift in regulatory environment. So obviously the European Commission's talked about its FinTech action plan. I suppose, what does that mean from your perspective, Angelo? I presume it's a good thing that, you know, we'll have a greater number of platforms that have got pan-European distribution capabilities for you.
Yeah. Well, absolutely. This is part of the Capital Market Union, so creating a common framework across Europe to facilitate the distribution and so facilitate the fundraising and sides of the fund, but also creating a common framework of risk management and approach to the underwriting. I know that probably you are more involved in this than us actually, but it's one of the objectives that the Commission has in its plans to strengthen the framework.
And Patrick, anything to add to that?
Yeah, I think if and when this regulation actually happens, and hopefully it will be about at the right time for us, it will simplify our life quite dramatically, because today every time we open a new country, we add another order of magnitude to the complexity of what we do. So it would be great to have something at the European level, and I think there's a real willingness to do that. So hopefully we're going to get there.
Fantastic. Well, I think we've touched upon a lot of pertinent issues there. It's been really fascinating to find out a little bit more about the partnership and how it's working. I do think that the ability for platforms to attract institutional investment is going to be fundamental to scaling and helping SMEs navigate this challenge. So if there's nothing further, I'd like you to put your hands together for Patrick and Angelo.